And we'll have any later on Business Incorporated to bring us up to speed on what's playing out right there in Abidjan. All right, it's economic forecasting season, and the World Bank projects Nigeria's GDP will increase by 3.6%, while inflation is expected to average about 22.1%. Let's unpack this and other matters now with Mr. Bismarck Urani. He's the CEO of Financial Derivatives Company. Great to have you on the show, sir. Good morning.
Good morning, Ladi. Thanks for having me.
It's great to have you as always. And it's that time again, where most of these multinationals look into their crystal balls and tell us what to expect, for our economy. So looking at this latest one, what do you think are the key drivers behind this projection of a 3.6% GDP growth for Nigeria? And how sustainable is this growth amid structural economic challenges?
Yeah, it's interesting because we have to look at it from three perspectives. One, there was the spring meetings that held in Washington 2 weeks ago. There was the IMF outlook that said that Nigeria's inflation for this year would be 30%, and for next year will be 36%, based on certain assumptions, doomsday assumptions. Then there was the World Bank update, which says that we're going to grow by 3.6%, and average inflation for this year will be 22%. Now, what does it tell you? First and foremost, they say that the aspiration to get a $1 trillion economy is not going to be fulfilled because we have to grow maybe 3 or 4, 5 times more than what we're growing now to achieve that by 2030. So I agree with that the aspiration of a $1 trillion economy is not going to be fulfilled or achieved immediately, except something dramatic happens. But when it comes to the inflation numbers of average of 22% is credible. And then it takes me back to our own FDC's projection that came out yesterday, which is saying that inflation for the month of April, right, will be 24.82%. So if that is the case, and when you look at it, while food inflation decelerated, core inflation increased, and monthly inflation, for that matter, when annualized, came up very, very high to an average of over 3.2% per month, and giving you annualized inflation of about 58%. So what is the real thing? Now, Nigeria is growing. The World Bank says that we need to increase our revenues by lifting the ban on imports, right, so that custom revenues will increase. It says that your GDP growth rate is higher than your population growth rate. You'll be doing better, but not as much as you wished and not as much as you hoped. Like they say, if wishes were horses, beggars will ride. So that's the truth. The economy is limping out of the difficulty of last year. Companies are beginning to report profitability on a quarterly basis, but it is far, far, far. We are so far away from where we want to be and where we should be to optimize our resources.
All right, definitely, we get these projections, and most of the time there's supposed to be some kind of pointer, for you to, somewhat prepare or try to avert, what's been projected. What do you think should be the plan, right now to get some kind of soft landing, for the Nigerian economy with, better inflation numbers that we can actually feel, when we go to the stores?
No, what's happening is that most of the projections that were made, the pessimistic projections, were based on the scenario that the Trump tariff wars and trade wars would actually escalate and disrupt things so much. But what we are seeing now is that there's more of rapprochement and more of accommodation. And therefore, the Trump tariffs and the trade wars, even though disruptive, will not be as disruptive as originally feared. Therefore, we saw the price of oil come down to $58 a barrel, but as of today, it's at $65, $66 a barrel. Will it stay there? There's a 90-day tariff pause and reduction in tariffs. So there's so many moving parts. But the point is that we believe at Financial Derivatives Company that the doomsday scenario is exaggerated and that the world is not going to go through as much turmoil as was feared. Not to say that there will be no impact, but the impact will not be as damaging as was originally envisaged. But there are some problems and that what it does for a country like Nigeria, which is tariff neutral, it means it's a time to look inwards and to press the reset button and begin to boost productivity and growth and optimize the use of our resources. Are we doing that now? No, I don't think we are doing that. We could do much better. So basically, at least what policymakers are doing, they're not disrupting things, but they should be doing some things that enhance productivity and growth, and that's what we have. But I think it's worth mentioning here that Dangote has brought down the price to 825 naira, and that is significant at this time when global oil prices are increasing. So that will bring down logistics costs. The central bank was told by the World Bank yesterday that please maintain a tight monetary policy. Therefore, if we're to go by what was being suggested and what was agreed, one can say almost categorically, or one can begin to project that the central bank is unlikely to bring down interest rates. I'm not sure that they will increase interest rates, but at least they probably maintain status quo in the meeting of next week. So now coming back to domestic prices, which is what is more important. One is that I've just said it now, the price of petrol is coming down to 825 naira, which is the level which it was before it increased in March. We are also seeing the price of certain commodities begin to increase. And you can see, for example, that Gari has gone up by 11% to 38,000. We've seen the price of rice increase again. It had come down to 82,000, now back to 84,000. Tomatoes, of course, because of the tomato Ebola, has gone up to 70,000 naira for the big basket. And pepper is up by 12% to 180,000 naira. So all of these things point to you that the cost of making a pot of soup, the cost of feeding, the cost of a meal at a restaurant have all increased because of one, there's not that the demand for it has increased, but the supply has been constrained because of logistics and supply chain disruption.
Yeah, it's quite interesting you mentioned the pot of soup there, because I remember there was a time you could use like 5,000 naira to make a nice, sumptuous pot of soup, but that's we don't see that.
No, now you need 50,000 to make that pot of soup.
50,000,
right?
yeah. Especially for those
look,
that like protein
tomatoes,
and taste and all of that.
Tomatoes is 70K, and so if you cannot get the soup, the stew to be red enough, you have to use carrots or something else as a substitute. But definitely, there are some hard times ahead, and this is the planting season. But let's wait. Maybe later on, in about 2-3 months, when we start having the harvest, we would see the price of a pot of soup begin to come down. But also, I want you to note that the price of cocoa is at $9,000 a ton, which is great news for Osun, Oyo, and Ondo State, where the center of gravity of exports of cocoa, and that means that their revenues are 400% higher than what it was 3 years ago. So that's one area that we're having a boom. Okay, so it's not all bad news. There's some good news, but
there's some good news. Yeah, there's some good news.
That say, sell in May and go away. That's what they say all the time.
Right, but it seems that narrative is not working, this May, because we're seeing some kind of rally, with some of these markets now. It's just maybe gold that's not doing so well, at this time. But I think there's a recovery. So I think it's about staying in May at this point.
No, stay in May. No, I think we'll still sell in May and go away, but don't sell everything.
Okay.
That's the thing. Sell some and don't sell your Bitcoin. And you guys are into the Bitcoin space, right? Bitcoin is over $100,000 already. So again, this is different. This May is different because there's a disruption. There's Liberation Day. There are all sorts of things happening in the Middle East and in Crimea and Ukraine. So it's not a normal May. So that we would sell in May with a caveat, but don't go away because you may need to.
Maybe sell in May and stay close.
Oh yes, sell in May, but don't go away.
Don't go away.
That's it.
All right. And talking about not going away, we're seeing oil prices getting back, looking comfortable above $60. Do you think sub 60 is behind us in the short term?
No, I think two things happened here. One, the Saudi Arabians, OPEC Plus, are saying they are now going to restrict the output hikes because that is what brought the price down. And now that Mr. Trump is in the Middle East, in Qatar, in Saudi Arabia, I think some kind of rapprochement will happen there. So we will see oil at about $60 or $62 a barrel. Don't forget, our break-even point is $60 a barrel, our fiscal break-even point, where we have fiscal neutrality. Therefore, while we'll not be swimming in money, but at least we'll be able to get by. But the truth and our future lies on how much we can dig deep and increase productivity, especially in the non-oil sector. But we need to invest in our oil sector. We've had people like Seplat and others, both onshore, offshore, and deep water. We need to invest and bring additional money. And then we have to create the environment. But two things that are important. One is that the money that comes in, how are we deploying it without having it leak? And two, how do we distribute this income in such a way that the rich do not get too rich and the poor do not end up in abject poverty? Because you know that we have a poverty issue here. We have a debt issue, we have a poverty issue, but we need to distribute more equitably and fairly so everybody's carried along. I think that's the key to this question.
Right. And let me take you to the stock market. Now, we did touch the 109,000 level. That's for the all-share index. But it seems that it's hitting or is about to hit some kind of resistance, from the previous high. What are you seeing? Are you seeing that resistance, broken in the short term, or do you see coming back down? That's for the all-share index.
No, I do not think that the stock market is going to come back down. Let me tell you why. The truth is that for 2023 and 2024, companies were reporting significant losses due to exchange rate translation losses, right? So now most of these companies have domesticated their international debt. That is due to their parent, due to suppliers, and therefore their debts are now on their local balance sheets. So if you look at their performance in the first quarter and possibly into the second quarter of 2025, we are seeing that on a quarterly basis, they're breaking even. You saw the MTN had their AGM, and they said categorically that by the first quarter of 2026, they should be able to distribute dividends. The tariff increase on telecoms kicked in March. There are certain things that are happening in the power sector. Hopefully, we'll get some reprieve there. But also, we are seeing that logistics costs are coming down because thanks to Aliko Dangote, who is the white knight here, who has helped us get to bring down our cost of petroleum products. So having said that, so if your logistics cost is down, the Naira is not depreciating as fast as it was by this time last year, that we are seeing money supply management being controlled by the Central Bank of Nigeria, it's only fair to say that most of these companies that are interest rate and exchange rate sensitive will do better in 2025 than they did in 2024. Therefore, if the stock prices today are the present value of future earnings, it means that those stocks are going to be doing better in real terms. So I wouldn't panic. That's why I said don't sell in May but stay, don't go away. That's why I say that again. So we'll see some things begin to happen. We've seen Presco, we've seen Okomu, we've seen some of these companies, Guinness, Nigerian breweries, most of them who were reporting red ink last year are now in black ink again. And so it's looking good for now.
Fantastic. Thank you so much, Mr. Ronnie. And let's hope we get more white knights in the private and public sector going forward. Thank you so much for coming on. Always great to have you.
Thank you for having me.
All right, still ahead on Business Morning. We see the World Bank says Nigeria must end wasteful electricity subsidies. We'll discuss that next. Do stay with us.